Strategy for business growth.
I think I called out right now in the previous question specifically how do we leverage technology through the life cycle, through the onboarding to our internal stakeholders so that they can service the customers better to the later stages. That is, analytics data is used through the underwriting journey because of the whether it's various frames the government which has now enabled, which is an account aggregator frame to using the data, parsing the data to be able to arrive at a quick decision, cutting down the decision making time, and also from a controllership point of view, which results into a lower cost. I think these are multiple pieces leveraging whether a digital ecosystem on now for a legal report weddings as well for a setup where you can do each and every piece, small pieces where
Thank you. Another question that's coming online is how have you managed to keep your gross NPS so less despite growing at scale?
Again, I think that is what probably in the NGTV profit I called out that it's a combination of the way we underwrite, the way we process, the customer segmentation we choose or the customers we onboard, and also a bit of on the side of vintage play that our is taking. That's what has resulted in the number we generate.
Next question from Subhakar.
Yeah, so the 6,500 crores you're raising, 6,500 crores you're raising, what would be the use of proceeds? I mean, most of it's for capital?
So there is a so the so the combination is 3,000 crore as a secondary stake, which in any case will go to the parent company which has been holding the shares. 3,560 odd crore, which is the primary capital, will go towards meeting the growth capital requirement of the company as we go from here on. Because we are a capital consuming business, we had been raising in the past a regular amount of capital through rights issue from our parent, and this capital raise will help us to meet the capital requirements without going to parent for a reasonable period of time as we go from here.
Both your parent company and you are in lab segment, so isn't there overlap?
I called out in earlier answer that both the independent board-run companies, both companies take decision on the basis of what is suitable for the business construct of that company, and there is no constraint on any of the company to operate, not operate, or not to operate this segment because the other company is doing it. But there is a construct of both the company. We are a dominant mortgage company. While we do a bit of unsecured, what I was calling out in an answer earlier, which is a 1.8, but it is not likely to be very larger part of the piece because the construct is mortgage. Bajaj Finance is a dominant consumer unsecured and a SME company. They can do the business what they will do being appropriate in the construct of the company, what board deems it appropriate.
The market is larger.
Thank you.
Hi sir, Mayur from how does Bajaj Finance plan to maintain its its market share among salary customers? Will they diversify?
Yeah, maybe you have to come back to us with that question because this is a Bajaj Housing Finance IPO press conference.
As a Bajaj Housing Finance.
Okay, sorry, so you wanted to ask me that question. So there is no particular share we target at a segment, like I was calling on basis of a certain calculation at a point of a time there can be a weight on the more segment. The number what are reflected is the outcome from the segmentation what it is there. This is not a guidance for future that there is a kind of a segmentation which will continue to hold. We are present across all the segments. At a point of a time, the weight on a segment can be plus or minus. So depending on what are the risks in that segment, what are the returns for that segment.
We'll move to another couple of questions from the online audience. The next question is actually directed at the bankers. If I would request one of the bankers to take this on. Is the allotment in the shareholder category being made in proportionate allotment basis or lottery? And what is the maximum investment that the shareholders can make?
It's only the anchor portion where there's the discretion to allot to equity investors. Outside of that, the equity investors participate in the main book, which is the 20% of the overall IPO size. That's proportionate. The retail is proportionate, and the non-institutional segment is also proportionate.
Thank you. Back to the management. Sir, if you could throw some light about your micro market focus for home loans.
So when we call it a micro market, see, because when we operate in let us say a megapolis, we are sitting in the city of Bombay, which is the largest megapolis in the country. While we call it a Mumbai, but Mumbai is not one, and even we can't call it a Mumbai Thane as two cities, because each micro market within in a Mumbai or a Thane or Sindhi, whether a Delhi or an NCR, has their own characteristics and a different kind of a customer requirement, needs, profile, and the method to operate. So that's where when we call it, so when we operate, let us say a Kalyan domicile bank, that's a focused approach there, the kind of a parameters what we'll use to underwrite, or the kind of a presence what we'll have, the kind of a projects what we'll choose there to do will be differentiated from where, let us say, if you're operating in Andheri or Goregaon. So Andheri Goregaon will be different, Kalyan domicile bank will be different, Vasai Virar bank will be different. So that's a micro market approach what we call it, because we don't believe a city, a megapolis in itself is one market. We believe it's a set of markets, and every set of market has a particular nuances, and we better cater to the nuance of that market.
Thank you so much.
Hi.
Okay, so we'll take on one last question before we close.
Hi, this is Rosebud. I'm from the Economic Times. This may be slightly repetitive, but home loans are not, the interest rate is not linked with a benchmark. It's more about the competition. And for you guys, correct me if I'm wrong, for about 75 lakh, 20 or 10 year, your interest rate is 8.5%. So how are you guys maintaining this interest rate below 10% is my question.
So, Rose, this is a function of your cost of funds, and also in the space what you operate in is a home loan market, specifically at a, let us say, non-affordable is industry which is where there are large players of banks and there. So there is a price setting and there is a price harmonization in that market space. So you want to operate in that market, that is the way you operate. Our cost of fund enables us to offer a competitive rate. I am not exactly sure of the price what you mentioned it, but it can be round about that price range, and it probably at that segment or that customer there, but there is a mix or a sum total of a customer segmentation. You look at it, you can't look at it a one customer to offer that. But a prime customer would want to get the best price what is available to him or her through the other institutions if we have to cater to that customer. That's what we have been doing for the last 6.5 years. That's what we intend to continue to do. So we'll match our ability to match the competitive offer of a competition. Any competition which is there has been what has held us in a good state, and that's what we intend to continue to live with. Because you can't offer a customer a 10% ROI if a bank is offering 8.5% ROI, then that business you are not getting.
Okay, thank you. So, in the interest of time, we pause the Q&A session here. We'll take the last one.
Your capital adequacy is at 21.8% as on March, and you're also raising fresh capital. So I'd like to understand the requirement for fresh capital at this juncture, and that could also have a carrying impact on your liabilities side. So how much of a impact on margins or on liquidity do you think, or measures do you think that this could possibly have? And if I can also add, why do you want to raise capital when you're at 21.8?
So when we look at the leverage ratios rather than the capital adequacy, because capital adequacy is a combination of risk weights which is allowed by the regulator and the leverage. So we internal metric what we look at as from a sustainability point of view is more leverage. Our board approved sustainability document says 6 to 8x leverage is what we operate in. Look at historically last 6 to 7 years, that's a metric where we have always raised capital. We are in a 6x leverage now, and of course by raise of a capital, when you do a versus a rights issue as a privately held company versus a public issue, you end up having a bit of a overhang because your leverage ratios goes on. Our leverage ratio is likely to go down to close to 5, but that's for a point of a time. If we continue to grow the way we, because we intend to continue to grow, because the money is being raised for a growth capital for the company, leverage ratios will come back to again the sustainability corridor of a 6 to 8x at a period of a time. Whenever you raise capital, you will come below a threshold of leverage ratios. Capital.
This prestigious transaction.
I thank you all for attending the press conference on the launch of the Bajaj Housing Finance IPO. This IPO is truly the most awaited IPO of the year and the first from the Bajaj Group after several years. This is truly incredibly a rare opportunity for all the investors to participate in this transaction, and I say so for 4 solid reasons. Number one, it's an opportunity to participate in the second largest HFC, which is growing very fast and has achieved an AUM of 97,000 crores. 2, it operates in a dynamic housing finance sector, which is a very well sought after sector, and within this sector, the company has achieved a diversified product bouquet and is catering to every segment within the housing finance sector. Third and most important reason, look at the way they operate, look at their liability profile, the way at which they have been able to borrow the money, and more importantly, the risk management and the ability and the engine with which they deploy this money has resulted in the lowest gross NPA and the net NPA for the company. And last but not the least, to make all this work together in a tandem manner, in a well-oiled manner, it would have not been possible without the great management team that we have in this company. Again, thank you very much for being here. Before we sign off, I would request you to take note of 3 important dates. 1, the issue opens on Monday, the 9th of September. Issue closes on Wednesday, the 11th of September, and the anchor book should be out on Friday, 6th of September. Thank you very much. And